Hello everyone, welcome back to another episode here on the Virtual Bacon channel. Today, as we are going live and speaking, the market is having at least a short-term correction that is looking kind of shaky. So we're going to cover exactly what's happening, and I think this is a really good time to cover my general strategy when it comes to playing the bull market, but still being able to sustain one of these corrections and how to manage my portfolio so that I don't have FOMO on the way up. And when it's time to stay safe a bit, I can have kind of a balanced approach to protect myself on the downside. So that's what we're going to cover for today with my, I would say, super simple 3-tier portfolio strategy. And I'll also give you my current stance on the Bitcoin market as well. Okay. So if you guys are new here to the channel, welcome. My name is Dennis. I'm a crypto angel investor for the past 5 years, and I have invested in over 100 crypto companies. On this channel, I share my views on market trends and investing strategy to build wealth in crypto. So before we get right into this, let's just jump quickly on the Bitcoin chart, and I'll show you what I'm talking about. So yesterday, before I went to sleep, I made an update pretty much on all of our socials. So here, if you follow our community tab on YouTube as well, I covered this chart very briefly yesterday. So basically, Bitcoin was grinding down from this 36.5K level, and I was really not liking the price action there. You could call it lower highs or double top, but essentially, if the market is still staying very bullish, and especially that this week we're expected to have another window of opportunity for the ETF announcement, then this chart was not saying that. This chart was showing something else, and that's why I thought it was very fishy in the market, and potentially there could be a wipeout of the leverage. And that's why I said everywhere, I'm getting out of my altcoin trade positions, better to cut early and stay safe. And I also, talked about this on Twitter. Right, exact same thing, exact same chart. And also, if you want to follow my day-to-day, make sure to join our Discord as well. So in our Discord, we have our free VIP program where I have covered exactly when I took these trades and closed my Bitcoin positions yesterday. So closed on my BTC longs at a small loss. I had some entries at 36.8K, but closed them at 36.5. And this honestly was a very short-term trade, but I really wanted this top of the parallel channel here to bounce. So once it broke below there, it really didn't look good to me. And similarly, we closed all of our current altcoin long positions last night and notified all of our Discord members. And in this case, I said, everywhere on socials as well. So honestly, just kind of a gut feeling and looking at the chart last night, but definitely dodged a bullet there. Now, I'm not saying I'm some sort of oracle or anything like that. So I think the reason why I'm able to just kind of make these cuts very quickly and not be very emotional about it is how I usually plan my portfolio positions. So a lot of times when I say I'm getting out of position, getting in a position, people assume that, typically beginners assume that I'm getting all in or all out, right? So if I'm announcing I think a certain altcoin has a catalyst event, and especially if it's a trading position, it's definitely short term and it's definitely smaller percentage of my portfolio. So by keeping the short term portfolio as a smaller percentage at all times, I'm able to stay very nimble because I know that I always have the kind of long-term Bitcoin, Ethereum, and altcoin holdings that I just hold no matter if it's bull market or bear market. And I'm okay if those have drawdown because the risks there are relatively smaller and I don't take as much leverage. So as long as I have that backing, I'm totally okay with closing a position rather early and quickly, because I don't have that fear of missing out if price does bounce. And this is really what we're going to get into deeply today. Okay, so really quickly, I have prepared a bit of actually slides for today's presentation. So this is basically 5 slides, very simple, of my 3-tier crypto portfolio strategy, right? This applies to bull market or bear market or whatever you may think. And the basis of this is that I don't go all in or all out into the market or into one specific sector, right? Instead, I scale my portfolio and I scale their percentages based on the market conditions and based on how essentially what Bitcoin is doing. So before we get deep into how I structure this, there's a very common chart you guys most likely have seen in crypto, which is this money flow chart. Shout out to Rex Capital, the original author of this chart. So the basis of this money flow in crypto was that there's this, it basically explains Bitcoin dominance and how when markets go up, Bitcoin first goes up, right? When you have money flowing from fiat into Bitcoin, and then people, once people get comfortable with their Bitcoin gains, then they go into large cap, mid cap, and low caps. But the problem with this is that most people, when they look at this chart, they only think of it as how to maximize their profits, right, by investing in crypto. So they come into crypto, they put all their money in Bitcoin, Ethereum first. Then once they're happy with that, then they take on more risk and put all of their Bitcoin profits into large caps and then transfer that into mid caps, into low caps. But eventually, when a market flush comes, everything gets reset, right? So that is not a sustainable strategy if you just always move all of your portfolio down the risk ladder, because eventually the flush comes and whatever the higher percentage gains that you made in mid caps and low caps or leverage trading, short-term trading, you will give it all back because those positions are fundamentally more volatile than holding Bitcoin or Ethereum. So this is why I like to make kind of this proposed kind of update to this money flow. This is kind of how I use this chart to formulate my portfolio breakdowns, right? So instead of seeing this as a way to, put all your money in which basket at what time, what I like to do is that to categorize each sector of these kind of risk tolerance and then adjust my portfolio percentages in each depending on which period of which phase of the market we are in, right? So for instance, when Bitcoin was first having its breakout 3 weeks ago now, end of October, when Bitcoin first broke out to 33K, that was the period when bunch of fiat money were flowing into Bitcoin and Ethereum. And this was a very easy time to make money because everything was shooting up as Bitcoin has finally broken resistance. So during that period, it made a lot of sense to just deploy your money everywhere. Take a very aggressive approach because if you look back to the chart for the past since October 24th, Bitcoin has just been going slowly grinding up, right? There hasn't even been any lower highs made or lower lows, which means as long as Bitcoin is in this slow uptrend, altcoins are good. It's very easy to make money if you just stay long. And that's why in that kind of period, I can comfortably deploy my money in all risk levels here. However, once market looks kind of toppy and something like yesterday's scenario when, it broke down below this resistance of this parallel channel, but didn't bounce from it, if I'm feeling a little bit anxious about what the market is doing potentially, then what I could do then is adjust some of the higher risk and lower market cap positions, including short-term trading positions, moving them into Bitcoin and into cash, but not fully selling everything into fiat. So this way, I can still maintain that medium to long-term exposure to the market because, I think long-term Bitcoin, Ethereum, everything is looking super good for 6 to 12 months. So I still have that backing, but at the same time, I avoid that short-term drawdown very quickly. So this is why I really like to think of the money flow, not in terms of where you should put all your money in each basket, but rather identifying that as you go down the ladder of the flow, the risk gets higher. And thus, depending on if the market conditions are easy or harder, you adjust how much percentage of your portfolio you put into each category. So that's the basis, okay? Now, I have three, basically my portfolio breakdowns, right? Now, these are going to be very simple pie charts of larger sectors, right? We're not going to talk about individual altcoins that have, 2 to 5% of my portfolio breakdown, because that's not the point, right? If you are interested in that, we do have a full 2024 altcoin portfolio section video coming up by the end of the year. That's going to go very in depth. But the reason why I don't talk about it today is because it doesn't matter what altcoins you have in this overall, long-term altcoin green percentage of the pie here. It doesn't matter, right? Every single altcoin is highly correlated to Bitcoin and Ethereum. And no matter what you put in there, if you don't adjust that overall pie, you're always going to be underexposed or overexposed depending on your risk tolerance. So this is why it's very important to at least have a overall portfolio breakdown that contains, in my opinion, Bitcoin, Ethereum, what you have in long-term altcoin holdings, and then lastly, a more risky short-term holding, right? So let's break this down. For the past 2.5, about 3 weeks, this has kind of been my portfolio breakdown. So I have always kept 25% in Bitcoin, 25% in Ethereum, which makes up half of my portfolio. That's always been the case. I have had this section of the portfolio since forever. And then another 30% is in long-term altcoin holdings. So some examples, these are things like Solana, Chainlink, Arbitrum, Matic. What else do I have? I have Rollbit. I have some AI coins like Render. That's also in my long-term holdings now. Just some examples. I don't have the full list with me. But then the last period, the last sector is this 20% that I put into short-term trading, speculating on intraday or within the week swing trades based on catalyst events. On top of that, you can put these into new altcoin launches within that 20%, or you can keep them in cash in case opportunities come up. So this is exactly my portfolio breakdown, not including the individual altcoin holdings in this altcoin spot percentage right now. So by having this basis, here's what's really cool about this. So at all times, I know that I have this Bitcoin and Ethereum and altcoin long-term exposure, right? Which means even when I wasn't completely sure yesterday if this 36.5K level was going to hold, even when that was the case, I could still sell my short-term trade positions. So sell this 20% of my portfolio into cash, because, well, even if Bitcoin bounces, right, from 36K shoots straight up to 38K, that's totally okay, because I still have that long-term exposure that I have had for many, many months now. So I don't have that pure FOMO that a lot of people tend to have if they move their entire portfolio back and forth. But at the same time, by having this 20% of that short-term, flexible, nimble, speculative part of the portfolio, once I go into cash, I keep it in cash, and then if this drop does come, well, now I have that 20% cash that I don't put it into Bitcoin or Ethereum right away. Instead, it's kept on those exchanges. It's kept on whatever the trading avenue is for me that I initially bought those altcoin positions or trade positions, so that I can deploy them into the opportunities very quickly. So this is the aggressive portfolio breakdown that I have in a very trending market, and that is right now. So this is why yesterday when I said, I have cut my short-term altcoin positions, that was this 20%, right? I've cut all my trade positions, which includes things like right here, things like leveraged Bitcoin trades, things like large caps that I'm speculating on the short term. For example, Matic, we had a Matic position from 2 days ago. What Matic had their upcoming event that they're launching this layer 2 ZK chain with OKX. That was a pretty big event, and that was a short-term trade we were taking. as well as things like low cap or leverage altcoin trades, right? So we had some leverage longs on Ethereum coming from the Ethereum ETF announcement from BlackRock, which we still had kept open. So these positions, and for example, for our AVAX ecosystem plays for Benki and Joe, these count as low caps. So these were the positions that go into, where's my chart? These were the positions that go into this 20% of the pie. And those I can very comfortably go in and out of cash with. So that's where we're at right now. I am still very deeply deployed in the market with 25% Bitcoin, 25% Ethereum, 30% altcoins. But that last 20% that I used to speculate with for trading and short-term opportunities, well, I have flipped that into cash yesterday. Okay, so now what's next, right? What is going to come with the market? So now I simply follow, right? I follow where Bitcoin is going next and look to deploy this portfolio back into the aggressive approach by taking that cash position and putting it into trade positions again, but at better entries. Or if Bitcoin continues to drop, then I can deploy it into one of these two other types of portfolio. So for example, here, this is a more balanced portfolio that I used to have in the bear market. So this is when actually I have even covered a very similar portfolio at the beginning of the year when we were still prepping for the bull market. So we were still in deep bear market. So you can see here, I had 25% Ethereum, 25% Bitcoin, and then the rest split between altcoins, right? And all for long-term holding. So this is a more balanced portfolio that I might take in the next few weeks if the market turns overall and if we go out of this trending period. So then if that happens, then I can go from this aggressive approach into this more balanced approach where I take that 20% of trading funds and cash for short-term opportunities and I move that back into the altcoin positions. On top of that, if you are even more conservative, right? So if Bitcoin drops very aggressively, then you can even take a more conservative approach by taking this last bit of 20% that we have now kept into, put back into cash, then deploy that back into Bitcoin and Ethereum. So that will make up 35% Bitcoin, 35% Ethereum, 30% altcoins in spot positions. Now, I don't think this is necessarily needed because the long-term trend on Bitcoin and on the crypto market is still very clear, but this is still there in case something drastic happens. Okay, so that's basically the very simple three-tier portfolio strategy. TLDR is that I don't go all in and all out, right? I don't have 100% of my portfolio in a short-term trade position, even when the market is trending up and there's a lot of froth, because you have to recognize at all times, as long as you just keep majority of your money in Bitcoin and Ethereum, it's in your best interest, right? Because when the market is going up and Bitcoin and Ethereum naturally just goes up. But when the market is looking iffy and you want to exit your short-term positions, but at the same time, you're having that FOMO of what if I was wrong? Well, as long as you are able to keep this long-term holding of majority in Bitcoin and Ethereum, you wouldn't have that problem because you're protected either way. If market does have a bounce, you always have that long-term bag that is, keeping your sanity in check. But at the same time, it makes you very nimble because you know that whatever you have in this last risk basket is meant to be very flexible and moving very quickly. So that is why this is my approach, and this helps me a lot in adjusting my short-term bias. Okay, that's the portfolio section of the day. Now, just last little bit of portfolio strategy. I just want to show you guys this indicator that I have here on the chart. So this is called the historical volatility. of, you can find this just on TradingView, right? By typing in historical volatility, first one here. So what this chart gives you is the volatility, right? The volatility of an asset that it tends to fluctuate from its long-term averages. And on this chart, I also have drawn a very long-term moving average here. So I have drawn the 200-day moving average on top of this historical volatility. So the reason why this chart is very useful, this indicator is very useful, is that it tells me how volatile a altcoin is relative to Bitcoin. So listen to this, right? Most of the time, when you are trading a decently large altcoin, for example, Solana, the effect of that is very similar to a 1.5 to 2x position on Bitcoin. So whenever Bitcoin goes up 10%, Solana is very likely to go up, 15 to 20% at least, usually at least 20%, right? So you inherently know this, right? Because the crypto market is all correlated with each other. But how do you actually visualize this, right? With the information on the chart, with how much prices go up and down. You can do that with this historical volatility. So you see here, if we zoom out to the long term, on a daily time frame, the historical volatility of Bitcoin fluctuates right here, and the average volatility of Bitcoin right now is about 34. You see right here, this moving average red line on the volatility is around 34. Then, if we take the same indicator and look at Ethereum, you see the volatility of Ethereum is about 36 on average. So this makes sense, right? Ethereum is just a little tiny bit more volatile than Bitcoin, which means if Bitcoin goes up 10% or down 10%, Ethereum tends to move maybe 11, 12%. Again, you inherently know this, but this puts it in real numbers. Now, if we take this same indicator and we apply it to, for example, Solana. So you see the average volatility for Solana right now is about 69, right? So compare that to Bitcoin's average volatility of around 34.7. So that is right about 2 times, right? 69 divided by 34. So this means, very simply, if you take if you trade Solana, it's essentially very similar returns to having a 2x position on leverage on Bitcoin, right? Assuming that the two are heavily correlated because, well, everything is highly correlated to Bitcoin. So once you know this, and once you have this indicator, it puts you in a much better mindset, right? Because no matter which altcoin that I'm looking at, right? For example, if I'm super bullish on Solana, I'm just a Solana fan, or if I were super, bullish on Avalanche, for example, I can very quickly realize that, okay, they are, first of all, heavily correlated to Bitcoin, because you can also find a correlation indicator. But more importantly, having a long position on Avalanche is very similar to having, you see here, 54 divided by 34 is about 1.8x long leverage on Bitcoin, right? Very simply. So once you know this, you can much more easily formulate your portfolio breakdown, because in that case, you realize that, okay, no matter how bullish or bearish I am on a certain altcoin, well, they all follow Bitcoin and Ethereum to some extent, right? And they are very similar to just holding leverage positions on Bitcoin and Ethereum, so that once I see a Bitcoin drawdown potentially happening, well, I don't have to fear that what's going to happen to my Solana position or Chainlink position or AVAX position, because none of those really matter, right? If you look at the charts very closely, right? AVAX already started to draw down. Solana, similarly, Chainlink has drawn down even more. So really, it doesn't really matter which altcoin you're holding. Once you realize that most altcoins are just kind of slightly higher leverage bet on top of Bitcoin and Ethereum, then everything makes much more sense. So as long as you have that long-term exposure to Bitcoin and Ethereum, everything just falls in place. And you can be much more nimble, and you wouldn't feel as as attached to your bags, and you cannot exit them very quickly. Okay, so that's why I think this, volatility indicator is very interesting for me personally, right? Looking at this, what is happening on the volatility chart and how volatility between altcoins and Bitcoin compare is super interesting to me. Okay, so that's that. Now let's get into the charts, right? So what am I seeing on the charts, and where am I looking to buy in next? So a couple important things, first of all. So this flush down towards right below 35K. So we touched 34.7K. This is very typical, right? Because yesterday, the Bitcoin liquidation heat map was already building up on the 3-day time frame and the weekly time frame here. So I believe this would already be wiped here. Yeah, here. So you see, since November 8th, right, this liquidation level around 35K has just been building up very slowly but surely, right, at 35K. And you see right here, this morning, when Bitcoin's price dropped below 35K, you see all of these positions that had stop loss or liquidation levels at 35K got wiped out. And that's why you see the color here is not yellow anymore. It's reset. So this is a really good sign, right? So this means market is doing what it does, right? As people are getting very short-term bullish and placing their positions very aggressively, even with their positions would be liquidated at 35K, they're still way too confident. And that's why this happened, right? And another thing you can see why this is the cause of this this crash is because you see here, the liquidation leverage at 35K was around $600 million, right? You see here on the chart that has built up. And when you look at the Bitcoin open interest chart of this morning, so in the beginning of this morning, we had Bitcoin open interest at $10.5 billion. So you see right here. And once we had this drawdown on the price, Bitcoin's open interest dropped from 10.5 billion to 9.85 billion now. So that is a $700 million drop in open interest, or in other words, $700 million of leverage positions closed very quickly. And because price is going down, this means it was long positions being closed very quickly and being forced to sell. So this matches exactly of this rough liquidation leverage build up here. So this is already looking really good. I think if we are to see a bounce from this 35K level, that would be great, right? I do have to say that there is still a larger pool of liquidation that is at 33.9K, right here. And that liquidation pool is huge. That is $2.1 billion of leverage there, which means if Bitcoin just drops slightly below 34K, 33.9, let's say it drops to 33.6, it's going to print quite a big wick, maybe even touching 33K. Just very simply looking at this liquidation leverage here, right? How significant this color code is. So with that information, I think, first of all, the number one thing I can do right now is by placing a limit long below here, right? So below 33.9. So something like 33.5, let's say 33.6 and 33.2, right? So this is exactly what I'm going to do after the live stream, right? I'm going to go on our exchanges, which in this case it's Fairdesk. I'm going to place a bunch of limit longs in this range, right? 33.2 to 33.6. Because if the flush just continues a little bit more, we're likely to at least wick to this area. And this is going to be really cheap buying opportunity if this happens. So with that in mind, is it time to buy back your favorite altcoins from the past week? I'm not completely convinced on this yet, because, well, this short-term flush hasn't really touched the larger liquidity pool at 34K. And that's not even that far away, right? We already went as far as 34.4. So that's why I am watching the market and watching the strongest altcoins in the drop today that hasn't dropped as significantly as others. And those are going to be on the top of my buying list, but going to watch it for at least 2-3 more days to see if a bounce does come. And again, if you want to extend this parallel channel that we had before, this is also touching the bottom of this parallel channel. And I would even dare to say that if you draw some sort of a long-term indicator like EMA, it's going to come very close to that. Haven't tested this yet, but here. Nope, not even. Okay, so we're still very far away from the bull market supports. Anyways, so with that in mind for Bitcoin, what is on my watch list right now? So the obvious ones are Solana. I mean, everyone's favorite altcoin for the past months has been Solana. And Solana, if it has another bit of a drawdown if Bitcoin has another flush, let's say towards this range. Yes, that looks beautiful. Yeah. Towards this range, between 44 to 48, that would be wonderful, right? For Solana. Honestly, quite good looking chart for Solana, even on just this morning, right? When Bitcoin dropped when Bitcoin had this very dramatic drop, Solana only went from 57 to 53-ish. So all in all, very good looking chart for Solana. Similarly, you can say Chainlink, right? So for Chainlink, I have had these levels drawn before. So ideally, I would like to get an entry between 11 and 12.7. So with an average entry of around 12. If I can get this trade, that would be wonderful for Chainlink. A couple more examples here. AVAX. This is, I had these levels drawn before. So my initial position was around here, 14.3. If we get back into this range between 14.3 and this lower consolidation level here, let's say from 13 to 14.3, that's going to look quite attractive to me. Let's see what else is there. And then some of the strongest ones that hasn't even pulled back much. And the ones that we have mentioned in the past couple weeks, the ones that are really just having a nonstop run, right? So a very clear one here, TAO, Bittensor. This is the most trending AI altcoin out there, right? So this one is starting to come down a bit, looking very, very good. So let's see. If I have to draw, there would be an immediate short-term level here at 123-ish, where it tested as support here. So if it comes back down to here, this is going to be my first entry target. And if this level breaks, going to be trying to enter right around the $100 range. So ideally, let's say between 100 and 122, that would be very ideal. So average entry, let's say 110-ish for TAO. That would be really good. Okay, I think just a couple more super outperformers in the market. Another one here, Kaspa. This is, again, one of the best performing altcoins in the entire year. And you see here, I have no idea how this is even going up as Bitcoin is having its drawdown. So this is kind of crazy to me. Even when Bitcoin had this flush, Kaspa just does its own thing. So yeah, I don't know what to say. So maybe if it comes back down to around 8 cents level, I might be interested here. But ideally, still would like to target these lows here, around 6.4 cents on average. Last one here, Injective. Ooh, this is looking good. So Injective, I had these charts drawn since before it even had this breakout, right? So we had the long-term support at $9.40. I don't think that's going to come anymore. And short-term entry, it's already getting into this range, right? So Injective, you see one of the strongest performers in this entire rally, going from $7 to $8 all the way up to 18. So doing more than 2x in the past month. Coming down to this, my overall entry range already. So I would say anywhere between 11.6 to 15. Very wide range, but I don't want to miss this position. This has been one of the strongest performers. So this is kind of what I'm looking at. So let's say if I can get an average entry in this range, right? So I would ladder my buys at something like here, this level 14.2, and then probably buy some more here at 12.8. Yeah, that would look really good. So if I can just get some laddered buys in this range, between 12 to 14, I think it wouldn't go much lower than that. That would be quite an ideal entry for me for Injective. Again, once Bitcoin is having this drawdown, you want to bet on the strongest performers in recent times, and that's basically all the coins we have just mentioned. TAO, Injective, Kaspa, these are clearly the three strongest performing coins in this entire run. Rollbit as well, right? Rollbit hasn't even made much of a correction at all, and I'm still holding my Rollbit position as well. Yeah, so that's about it. Yeah, okay, so that's everything I wanted to cover for today. I don't have much time for Q&A because I do have to jump to another call. So if you guys have any questions about today's content, make sure to join our Discord with the link in the description. Discord.gg/virtualbacon, and you can, it's completely free VIP program. All you have to do is sign up to one of our partner exchanges, and you can start following all my trade setups and my alpha alerts. And if you have any questions left for today's content and my overall strategy, drop me a message in Discord and we can connect there, and you can talk to all of our other members as well. Okay, last but not least, make sure to follow me on Twitter or X at virtualbacon0x. This is where I drop for sure all of my most important alpha. For example, when I was exiting the market last night, so I can't do live streams all the time at any moment, but Twitter is much easier to drop these thoughts. So definitely follow me there if you don't want to miss the most important things. Okay, that's it. Thank you guys for joining, and I will see you in the next video and next live stream. Cheers. Bye-bye.